Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your Capital Markets Report. Today is Thursday, March 27th, 2008. Motorola will split into two public traded companies in order to separate its loss-making handset division from other businesses, reports Reuters. The move, which comes amid a feud with activist investor Carl Icahn, could be a prelude for a joint venture for the cell phone business, analysts told the Newswire. They said separating the cell phone business, which has been losing market share to rivals Nokia and Samsung Electronics, could help Motorola to find a strategic investor. Motorola, now ranked third in the global handset market, said the split would take the form of a tax-free distribution to its shareholders and expected it would be completed in 2009. Staying with capital markets news, Brazil's Vale has terminated talks on a takeover of Swiss miner Xstrata that could have generated $90 billion in M&A volume. Optimism among investors and bankers was running high for a deal up until Tuesday, when the companies jointly announced the termination, according to Latin Finance. Using language that clearly indicates disappointment, the pair emphasized that the deal would have created shareholder value, but that an agreement could not be reached. However, they left significant wiggle room for a return to the negotiating table. Vale reserves the right to make an offer for Xstrata within the next 6 months if Xstrata's board agrees to one or if there is a competing bid. And in other capital markets news, Tata Motors will pay Ford Motor about $2.3 billion for Jaguar and Land Rover, and Ford will contribute up to about $600 million to the two brands' pension plans under terms of a sale agreement, the Financial Times reports. Ford will also continue to supply the Jaguar and Land Rover with engines and transmissions, stampings, and other components. Its credit arm will provide financing for their dealers during a transitional period of up to 2 months. The deal is seen as a new high water mark for an Asian company in acquiring two world-renowned automotive brands. And in other capital markets news in Asia, heavy machinery maker Caterpillar Incorporated will take control of a Japanese venture with Mitsubishi Heavy Industries to help expand in Asia, Bloomberg News reports. Caterpillar, which is the world's largest maker of earth-moving machinery, will increase its holding in Tokyo-based Shin Caterpillar Mitsubishi to 67% from 50% in a transaction valued at $500 million. The Illinois-based company will have an option after 5 years to purchase the remaining 33% held by Mitsubishi Heavy Industries. Caterpillar is expanding in Asia, counting on increasing sales in China, India, and Southeast Asia to counter the U.S. housing slump. And that rounds out today's Capital Markets Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our Capital Markets channel online and read the latest developments.